Hello everybody, this is Daniel Wynn and welcome to the Cash Flow Capitalist podcast. In this podcast today, I'm going to go over how much you need to get started investing in mortgages and trust deeds. Over the last few weeks, we've been talking about the different reasons why you might want to consider investing in mortgage and trust deeds. But today we're going to go and explain the different types of vehicles you can invest in and what is the minimum amount to get started. So let's go over that first. The minimum amount to get started, in my opinion, is $10,000. Now, there's other vehicles for investing in notes, right, which is different than mortgages and trust deeds. You can invest in unsecured notes, business notes, and you can do that online for as little as $100 or $50. But we're talking about investments in real estate, mortgages, and trust deeds. So the minimum amount is $10,000. So if you have $10,000 and you want to earn 8, 10, 12% interest, listen to this podcast and I'm going to share with you how you can get started. The main reasons why you want to get started in mortgage and trust deed investing is because it offers diversification from the typical investments that are out there, like your 401k or retirement plans. You put money in the big mutual fund companies or the recommendations of your financial planners. So this is just another way to diversify, just like owning real estate, gold, silver. This is another asset class that will give you diversification. And the reason why you want this diversification, because you are secured by valuable real estate. And most importantly, you want to gain monthly cash flow that trust deed investing offers. So let's recap what trust deed and mortgage lending is again. Mortgage and trust deeds are loans secured against real estate. And then when you make a mortgage loan and at a title company, the mortgage is recorded in the county where the loan takes place and where the property is located. So you are secured as a creditor. Trust deeds are also known as mortgages. It depends on what state that you'll be doing your investing in. On the West Coast, usually referred to as trust deeds, and then east of the Mississippi is often referred to as mortgages. These are legal documents that are recorded in the county, like I just said, that show that it's secured by real estate. And it explains the outline to the parties involved, the terms of the loan, triggers for default and recovery. So how much money do you want to earn? First, we talked about what's the minimum amount to invest, which I recommend to be $10,000. But if you want to make a great income by investing in mortgage and trust deeds, here's an example of what you could invest and what you could earn. $100,000 earned could earn you at an 8% annual interest rate, $8,000 the very first year. If you can find an investment that pays you 10%, you could earn $10,000. Now, compared to the bank that typically is paying today at about 1%, that's 10 times more money that you will earn for your money working for you. If you want to scale that up and you have more in liquid assets that you want to put to work, you could see in the example below, if you had $500,000 invested, you can earn $40,000 to $50,000 annually. You profit by becoming the lender. Here's the 4 different ways that I'm going to go over, and there's other ways besides these, but these are the 4 primary ways that you'll see people investing in mortgages and trust deeds today. Personally, meaning that you put the paperwork in your own name. You become the lender, and it's recorded in that fashion. Many people that have businesses will use their corporations or LLCs, and this is what I would recommend because it will keep your name off of the transaction personally. Either way works. I have plenty of investors that do it both ways, but whichever one is best for you, that's for you to decide. The third way that people invest is with retirement accounts. And retirement accounts have to be self-directed, right? You're not going to be able to take your Fidelity account and invest in a mortgage or trust deed that's not publicly traded because they have to use those vehicles. And they usually offer different yields than what we offer as a private mortgage lender and broker. So a retirement account could be a self-directed 401k or IRA. Whatever you have, you can put that to work and you can earn money tax-free. Let your money work as hard for you as you work for it. So here's 4 ways to start investing as a private lender. Number 1 is whole loans. Number 2 is partial loans. Number 3 are pooled funds. And number 4 is peer-to-peer. Let me explain those a little bit more in detail. Whole loans are when you are the only one on the mortgage as the lender. So whether it's you or your entity, you own the loan 100%. So you have 100% claim on that money. Partial loans are, let's say that there's a loan for $100,000 and you put in $50,000 and your brother, sister, somebody else, friend puts in the other 50. So the paperwork is drawn up as co-lenders. It's explained on the paperwork that this person or entity and this other person or entity own a percentage. In the case that the example I just gave you, that's 50-50, but it could be $10,000 and $90,000. And so then when the paperwork is all drawn up, it's drawn up legally, so when it's recorded, you have protected your investment. Pooled loans are typically done inside of funds, and most funds in America are registered with the SEC. So you often have to be an accredited investor to invest in these types of transactions. As a whole loan or partial loan, you do not have to be an accredited investor. Peer-to-peer loans is something you'll see if you Google it online, and that's another way that people have allowed investors to invest in a pool of loans. The peer-to-peer companies like Peer Street that was out doing this a few years ago, and I think they're still doing it, they would allow you to come in with like $1,000, right? A typical fund might want you to come in with $10,000. So they each have different qualifications. And what a pooled loan means is that if you put $100,000 into a fund that has $10 million worth of loans, you own a proportionate share of all those loans. So if one loan goes bad, you don't lose because your money is pooled over, let's say there's 100 loans in there. So if 5 loans are bad and 95% of them pay on time, and you're still going to receive your residual income. Whereas on a whole loan, if somebody defaults, you would stop receiving payments on that. So there's pros and cons for each type of investing. Here's some potential earnings that you can imagine or look at and decide what's best for you if you can receive these types of earnings. We have investors that invested with us over the last 3 or 4 years. So in a 3-year column, we have people that have made that type of revenue. That's because they were willing to take the risk, they were willing to invest in these transactions, and they were ready to move forward and keep investing year after year with us. The great thing about this is when you invest with a company like ours is that we never touch your money. Your money is wired to a title company that disperses all the funds. They insure the transaction. And then we set you up with a third-party servicing company that we've been using for years. And what I love about this is that you receive email notifications every time somebody makes a payment, and your payment is processed and ACH'd to your bank account. In this case, this went to one of my LLCs. It gives me a breakdown of the amount of interest that I've earned for the year. It tells me what's going on with my loans that have paid off. And it's really great reporting that helps you to manage this investment. So if you'd like more information on how to get started in owning a full loan, 100%, or a partial loan, give us a call at the office. Here's our website. Here's my phone number. Here's our email. We'd love to answer any questions you have and see if this is a good fit for you in the future. I hope you enjoyed this podcast. If you're enjoying it, please share it with people and let them know. We also record and store it on YouTube, so you can watch this on YouTube or Spotify. Thank you and have a great day. See you next time.